qualify for a home loan, especially a first-time home buyer's loan, we're looking at a minimum of 600, and really 620 to make absolutely sure, you'll get approved. So that gives you just an idea of, most of America the majority can get a home loan, right? Can get a car loan. Well, everyone can get a car loan, but can get a home loan. And if you find yourself under 600, that's okay. You're 20% of the country has under 600 credit score. And we can help move you up. As you can see, a lot of people have dipped down there or started there, especially if you are very new to credit. You're going to start, below 600 because you don't have a credit score. We don't have a history. So it's very common, and we can help you, move up into those higher tiers. So there are 3 credit reporting agencies, and I mentioned earlier, they all have we know the factors that make up your credit score, and we're pretty sure we have a really good idea of around the percentages for each piece of the pie, which I'll show you here in a second. But there are 3 different credit reporting agencies, and they each measure your credit in a little bit of a different way. It looks like we've got a new poll, so that's awesome. Let's get into that.
So I've launched another poll. John gave you a sneak. Oh, shucks. People were looking. All right, we'll give a few more. We'll give a few more seconds here. But again, we had our winner from last week on the call, Miss Laverne, winning the $50 gift card. And Miss Maria wanted to remind everybody to please place their questions into the chat so that she can find another winner of another $50 gift card. Okay. All right.
That's a great reminder. And it looks like everyone got 100% on the quiz. Great job. So they're paying attention.
Shucks.
That's great. Oh, well, 12 out of 12, 13 out of 13. Great job. So yeah. So there are 3, Experian, Equifax, and TransUnion. And I bring this up just because, a lot of times, especially after a presentation like this, or, people have visited the eBus, will pull their credit score, and they'll say, well, that's different than, the bank paid it a couple weeks ago, or that, Home Depot pulled it a month ago, or the car loan place pulled it. And that's absolutely true. Each of these agencies is going to view their formula as the best, and it's going to be a little different on the points. Usually it's about maybe a 10-point difference, sometimes maybe a 20, but it's not going to be a huge difference. And the reason that you might see different scores is simply because Fifth Third, I know we use TransUnion a lot, but the bank down the street or the other retail department, they might be using Experian, or another one might be using Equifax. So don't freak out, if you go somewhere and they say your score is a little different than what you think. If it's way different, that's a problem. If you're expecting 700 and they tell you it's 600, we got a problem here, but if it's 5-10 points, that's really not a big deal. Don't worry about it. Simply there are 3 credit reporting agencies, and that's why you see a variance.
Hey, John, we do have a question in the chat really quick. If you gave a credit card and you pay, I'll get clarification on the question.
Okay, sure. Yeah. Well, and this piece of the pie doesn't take too long. So this is, what goes into your credit score. And we're going to take a look at each of these a little more in depth, but just very high level. 10% is new credit. And one of the reasons that factors in is because if you go out and have your credit pulled, or you get a new credit card, chances are you're going to use it, right? So creditors absolutely look at your new credit as something that might factor into your score and your ability to repay. 10% of your score is going to be credit mix. So, at the beginning, I talked about how there's installment credit and revolving credit, and this is where that factors in. So do you have some of both? Have you only ever had credit cards, or have you only gotten a car loan and that's it? You've never gotten any other type of credit? If that's the case, you might want to consider, using other types of credit to increase your score. Length of credit history factors into it, and that just is simply what it sounds like. How long have you had credit? There's a couple more factors that we'll talk about later, but the overall theme of that piece of the pie is how long have you had it? And I absolutely, I used to be a branch manager near a university, and so every August and every registration period, we'd have a lot of new students signing up for cards because we were right close to campus. And I always liked it when their parents came in, because it used to be banks and other institutions would offer free pizzas and T-shirts and throw the world at these students to try and get them credit cards. And now for good reasons that you're not really allowed to do that. But when they come into my branch, I would love it when their parents were with them, because we could set them up on a credit card with their parents on it usually, and teach them to do it responsibly. And the sooner you can do it, and when I talk to these young people, I always tell them, you're going to get a job, in the not too distant future. You're going to be making some money, and you're going to want to buy a car or a house. And if you don't have credit established, you're going to have to wait that much longer to do those things. So the sooner you can start, the better it's going to look, as long as you do it responsibly. Okay, I'm going to repeat that a lot, because you need to do it responsibly. Whether you're starting out or you're starting again, we got to do it responsibly. 35% is payment history. So when we on the quiz earlier, we talked about how payment history, if you pay your bills, you'll have good credit, is fiction, and that's because there are 5 pieces of this pie. Now, payment history is the biggest; it's the largest, and and we'll talk about how to influence that piece of the pie. But it is 35%. It's the largest piece, because the next piece, which is debt and available credit, is 30%. And again, that one's a little tricky. There's a good slide that we'll show here in a minute about what goes into debt and available credit, but high level, that is simply how much available credit you have to you and how much you're using. Okay, so there's some good rule of thumbs when it comes to that, how much you should use. But I'll go ahead, and it looks like we've got a couple questions in the chat. So
yeah, so one of them, I lost it, but I know that she's asking if you have a credit card and then you close it. So if you have a credit card and you pay it off and you close it after a few uses, will that be a derogatory mark on your credit report?
So it wouldn't, as long as you made all your payments on time, it would not be derogatory. But I am going to show you a slide here in a little bit that will show you a different option as far as closing it or leaving it open. So I'll tell you, you should leave it open, but you don't necessarily have to use it. And I'll show you why here in a minute.
Yeah. So the way that I started boosting my credit was with Fifth Third secured credit card. And with that Fifth Third secured credit card, I've had it for almost 11 years now. And so it's one that I'll never close. And I just have like Netflix on that one and paying it off every month, because it's my oldest line of credit. It's what's giving me the age that I have that has me in the range that I'm in.
Absolutely. That length of history, and one of the reasons that, credit card agencies back in the day, they don't do it anymore, but would really entice young people, is because there's that, sentimental factor that this is the first one that we've used. They gave me credit, and I'm going to stick with it. So a lot of people, wherever they open their first bank account, they stick with for a long time. So there is something to that. All right. So now we have looked at our credit. We've seen what we have, and we know what goes into it. So we're going to look and see how we can influence our credit score, how we can shape that to, again, make it higher, because that is typically the goal. First thing that you should do is figure out where you are as far as credit. And there's a couple different ways you can do that. Annualcreditreport.com is a website that we use on the eBus. I fully endorse it. You go online, You type in your information. They will ask you some security questions just to make sure you are who you say you are. But you are entitled to one free report from each credit agency per year. So again, there's 3 agencies. You can get your credit report 3 times, one from each per year by law. And if you aren't able to access it online, there's a paper form you can fill out, or you can have it mailed to you. So, if you have some technical issues, we can get past that. But what this is going to show you is what's on your report. It is not going to give you a credit score. So you're entitled to your report, but you're not entitled to your actual score. I still think it's a great service. I highly recommend at least once a year, hopefully 3 times a year, you check it, make sure everything on there looks accurate, make sure there isn't a mistake. If there is, you can dispute it through this website, or you can, ask for the paper dispute form. We've caught fraud on the e-bus from people looking at this site, to see what's on there. So I absolutely recommend you do it. If you really want your score, Credit Karma is one that I recommend. You do have to sign up for an account. You have to give them your email and establish a password, but it will give you your score and it will show your report as well. It will not charge you, but it might spam you. So just keep that in mind. You might get some emails, you might get some offers. That's just part of, what they do. That's kind of how they make their money. People obviously take them up on that or they wouldn't do it. But that is one I recommend. Any website that asks you to put in a credit card or a debit card for access to your credit report, I do not recommend using. They, a lot of times, will not charge you immediately, but if you don't cancel your account with that website within a certain period of time, whether that's a week, 2 weeks, a month, they will start charging you for your account for giving you access to your report. So just keep that in mind. If they ask for a credit or debit card, I don't recommend using it. But that one's good. And again, Credit Karma, we haven't had any complaints with so far. So the next thing you need to do is develop a strategy. If you look at this whole piece of pie and these 5 different, areas that you can influence, it's a lot of different areas, right? But so you may not have the opportunity right now to influence your payment history or your length of history, but maybe we can work on your credit mix with a secured card, or work on your debt and available credit, which I can show you how to influence actually each of these. So the first one we're going to look at is new credit. One thing you should definitely do is rate shop in a short period of time. The easy example, the easiest one that I can think of that I hear a lot is car shopping. I absolutely understand you might want to go to several different places to see what they have available. You might want to test drive a few, but if you go to 4 different car dealerships in a week and have each of them pull your credit, it is going to lower your credit score. And that many in that short of time, it could lower it 10 to 20 to 30 points. Each one might lower it 5 or 10. And if you do a lot of those in a short period of time, it can really make a big difference. And we showed you earlier on that slide what a difference good credit or high credit, versus low credit can make. So what I recommend doing is go to Credit Karma or one of those websites and print your credit score off. That way, when you go in to apply for credit and they say they need to run it just to see what you qualify for, you can say you don't need to run it because here it is right here. And anytime you're able to pull your own credit score, it does not count against you. So just keep that in mind. But yeah, rate shopping in a short period of time can absolutely lower your score. So don't do it. Credit mix is kind of what we talked about, that balance between revolving and installment. And really, they're just looking to see if you have some of each. So revolving is the easier one to kind of get quickly and get it so that it doesn't cost you any more money. Again, like Tiffany's example of just using Netflix for your credit card. That's a great example. I've heard of people getting a credit card and just putting gas on it and paying it back each month so that they don't go over or spend more than they're able to pay back. So one good point here is you have to use it. You can't just get a card and not use it. Then it's not reporting to your credit bureau as making payments, and it's really not going to help you at all. So get one and use it, but use it responsibly. Length of history. So this is another good one because this can be kind of complicated, but I think this example does a good job of breaking it down. If you look at these two examples, we'll just call them A and B. They each have a mortgage and a Visa card that they've had for 15 years and 8 years. Person A, though, has had a MasterCard for 4 years, so their average length of history is 9 years. Person B has got a MasterCard, a car loan, and a store card that they've all gotten those 3 credit lines within the last 2 years. So that brings their average down to 5.5 years. And that's simply because they've gotten new credit. It's human nature that, you know, as you get new credit, you're probably going to use it. And that lowers your ability to pay back any new credit you might be applying for. So it can lower your credit score. The longer that you keep your credit, you know, the better it's going to be. And really spacing out your applications, you know, is a great idea in general, not just car loans or anything like that. So that's how we view length of history. I actually just have a couple more slides and then we'll get to your questions. So in payment history is exactly what it sounds like. There's no quick fixes. I always talk financial education. It's not rocket science, but it does take time. And this is one of those things that just takes time. So negative accounts are going to have less effect. I believe negative accounts only, so the one thing I'll tell you is it will always be on your credit score, or excuse me, your credit report. So if you pull your report and there's something, and you know, you're like me in your late 30s, early 40s, and you know, you had a negative account when you were 18 or 19, it's going to show up. It'll be on there, you know, but it won't affect it won't have any effect on your score anymore. Same thing goes for positive accounts too, though. If you think about, you know, it's been a long time since you used credit, but when you did, you know, you're responsible with it. That's great, but it's not helping you anymore, right? After 7 years after it's closed. So just keep that in mind for payment history. You know, they will absolutely have less effect over time. Something you can do to help remember to make your payments, at least your minimum payments on things, is to automate your bills. If you have had collections or bankruptcies, reestablish positive credit. The easiest way, as Tiffany mentioned earlier, is a secured card. The way that works, just quickly, is if you save up $300, that's our minimum, up to, you know, $2,500, $5,000, whatever you want. You put that in a savings account. We will put a hold. The bank will put a hold on that savings account, and then we'll issue you a credit card for the amount, with a credit line for the amount that's in your savings. So if it's $300, we'll give you a $300 credit card, and then you can use that once a month on a small purchase and pay it back, and you're reestablishing positive credit. And there's really no risk to the bank. You know, if something happens, an emergency happens, and you need to get to your funds, that's no problem. You just bring the card back, we close it, and you know, the hold is taken off your savings account. It's still going to earn interest. It's still your money. It's just you can't get to that as long as you have that credit card open. So that's the most common way that we see people, you know, reestablishing positive credit. And then lastly on this slide, if you do have issues, make arrangements with your creditors, okay? The last thing any credit institution wants to do is, you know, take your car or ruin your credit. You know, they don't want to do that. That's not good for the bank or the credit institution. That's not good for the customer. So if you do have issues, just about every bank that I'm aware of or credit union has some sort of hardship program. If you lose your job, if there's a death in your family, if you have medical bills, a lot of times, you know, calling the bank directly and asking them will do great. Agencies such as CAA and other agencies can possibly work with your creditors on your behalf with your permission to see what they can do for you. So absolutely, the worst thing you can do is just ghost, you know, your creditors and not talk to them or ignore them. Then they will, you know, move forward on unfortunate situations. But as long as you keep that communication open, I haven't heard one yet that just refuses to work with people. So the last slide we have for you on this presentation is the debt to limit. So this is what I talked about earlier, and there was a question about closing your card, right? So if you look at this example, this is one of my other favorite slides. So we end and we begin with great slides, but this person has a Visa account, a MasterCard, Macy's, and Home Depot. They've got $2,500 on their Visa. Their MasterCard is paid off and it's zero, which is great. That's a wonderful feeling to have a zero balance on a credit card. Macy's is at $500 and Home Depot is at $250. So when we talk about debt versus limit, all we're saying is how much do you have available to you and what's your balance. So if you look at the, if this person on the left side of the graph, you can see they're at 32%, and that's a really good percentage. General rule of thumb is try to never go over 50% of your credit available to you. So if you have a $1,000 credit card, you really don't want that balance to go over 500 if you can help it at all. And the best case is to keep it at 30% or lower. Okay, that's the very best, and that's tough to do. Don't get me wrong, but this person has decided, I don't use this credit card anymore. It's got a zero balance. I'm not going to use it. I'm really just paying down now, so I'll go ahead and close it. Well, as you can see on the example on the right, they still have the exact same balances. They have not added any new debt at all. But if they close that $5,000 available credit, it looks like they've gone from 32% of their credit ratio to 65%. And this is one of those numbers we want to keep as low as possible. So it looks like they're using a lot more credit than they really are, because again, they have added no new debt, no new balances, no new purchases. But if they took that action, it absolutely would lower their credit score. So there's nothing to stop this person from cutting up their MasterCard, shred it, bring it to the bank. We'll shred it for you. Just don't officially close it. Okay, you don't have to use it, but don't officially close it because it will lower your credit score. So that is the end of our prepared presentation. I'm going to take a drink of water and we'll see if we have some questions.
I do have one more poll, so I'll go ahead and launch the last poll, and it's a fact or fiction. I'm talking, but I'm on mute. Don't worry, nobody can see what your answer is. It's anonymous. It is anonymous. So nobody's gonna blackball you if you don't know. I can tell you, you guys are doing great. And we do have some questions in the chat. There's some really good questions in the chat. All right, I'm gonna give a few more seconds for the poll. So there is a person, she just wants to get a gauge on if she's on the right track. So she's saying she's got fair credit now. I'm guessing that's that Vantage score from Credit Karma. And they have a secured credit card through Chime. So really what would be, so if you were working with the activations department, what would they like to see on a person's credit report if they're getting a mortgage loan?
That's a great question. So again, to get a first-time home buyer loan, which is very common, and you don't have to necessarily be to qualify as a first-time home buyer. It just means you haven't owned a home for the last several years. So if you owned one in the past and you don't own one now, you would qualify. It's very popular. It's a lower down payment. To get that, I believe they want to see at least 3 trade lines. So at least 3 different types of credit. You know, preferably a little bit of both, but at least 3, and a minimum credit score of 6 to 620, right in that range. So, you know, if you've got that, I think you'd be, you know, on a good track. If not ready, you'd be very close to you know, qualifying for a mortgage.
How are they looking at collection stat?
You know, that's a good question. We do what are called owning it presentations that we would love to give you some information on. You can pass out. It's a really cool webinar. We typically do them on Saturdays, and we have realtors, we have mortgage lenders, we have head of our mortgage department typically does a presentation, and anyone that's really interested in buying a home should absolutely come to one of those presentations. I don't want to, you know, that is such a regulated area, and there's so many rules. You almost have to be a lawyer to really talk about those. So I don't want to give anyone false information, but yeah, I mean, it's going to factor into it. Again, if it was something that happened a long time ago, it's not going to have as much effect now. But you know, if you do have some collections on there, you know, I don't know that there's a hard, you know, if you got 2 collections, you don't qualify or anything like that. I think it's really credit score and ability to repay are the 2 main things that kind of go into that.
And John, I know that for sure, in the Owning It workshop, consumer credit counseling is right there, and they can set up an appointment, and they can go line by line through your credit report and tell you exactly, because it's going to vary. You can it's a variable answer. It won't be the same for everyone. So when you make that appointment with consumer credit counseling or one of the counseling agencies such as CAA, you will absolutely be able to determine what's going to be the best decision for you. And that's what you want. It's like, as I stated, it's not blanket. You need your own prescription. And it's going to be worth you taking the time to go to the doctor, to the credit doctor, if you will, and have them look at what your situation is and then create that strategy. John showed us a slide that says develop a strategy, and that's what your counselors are there for.
Very, very true. So I've got this polling question up just so I can take it down so I can look and see people's faces if they have questions. But 85% said fact, and that definitely is a fact. You want to know your due date, your cycle dates, and the date that your creditors report to the 3 major credit bureaus. There is nothing wrong with paying your credit card $25, $50 every week within your cycle dates to get down your balance, because the less you owe, remember, that's 30% of your FICO score. So the less you owe, the better. You got to remember that payment history, how you pay on time, is 35%. Those 2 right there, 65% of your FICO score. So it's very, very important. If you use something, $25 every week, pay it down within that cycle. Okay.
Very
good
important.
job. All right. So
Angel, do you see that one from Angel? She says, do you get?
Yeah. Do you get penalties for leaving it open or any inactivity fees? So I think Mr. John can really only speak to what Fifth Third has, but you can take that away.
Yeah, you know, that's a great question. No, and kind of, you know, earlier when I said no one needs to take on debt in order to raise their credit score, you know, if you do have all credit cards are different. You know, some have points, some have annual fees, some have, you know, fees just for keeping it open. So if that is the case, what I would say is, I would say try and get another credit card that doesn't have an annual fee, and then close your old one. That way you're not messing up your debt to available credit too much. You know, you'll keep about the same amount. I would try and get a new one before you close your old one, just in case, you know, you have some issues getting a new one. But no, I wouldn't keep one that has like a $50 annual fee open just because you want to have good credit. There's better ways to do it.
Valid point. This person, just like a general question, just wanted to see if they're on the right track. They're looking to raise their credit score so they can purchase a condo, and my building to begin their adult care facility. So they're looking to purchase 2 buildings. Just want to hear any nuggets of wisdom that you have for a person who's looking to have a investment property that's going to generate some income for them, and then their own home.
Yeah, that's great. No, that's wonderful. You know, and that's one of those things that you know, is wonderful if you can do it. So I would just make sure, you know, all the utilities and whatnot are in other people's names. You know, a lot of people, that just reminds me, a lot of times on the e-bus, we'll have people saying, well, I, you know, pay my energy bill and I pay my cable bill, so I've got good credit. And, you know, I have to inform them that actually that doesn't count. That can really, you know, the only time something like your energy or your credit or your water or anything like that come into play is if you don't pay them. They will put a collection on your report, so it could hurt you. So, you know, just make sure if you are going to get into the rental business, you know, I always say you don't sell cars or rent anything to family members because, you know, that can be a little dicey. But, you know, make sure it's all in the renter's name and stuff like that, all the utilities, so that, you know, you aren't on the hook if someone doesn't pay.
So recently I heard it's better to have only 6 to 10% of debt to income ratio opposed to keeping your DTI around 30%. I can attest and say this has certainly boosted my credit score and put me in the top tier by keeping my DTI really low. And DTI is debt to income ratio. We don't want to start
I love that.
alphabet
Yeah,
soup
yeah.
and not have everybody included. But that's really awesome. Thank you for sharing that.
And great use on DTI. Someone's done their homework. That's good stuff.
Yes, yes. This Miss Jaleesa is a pretty credit savvy person, I must say.
I can tell. I can tell.
But yes, that's awesome. Yeah, FICO definitely recommended keeping a balance on there. Definitely, as Mr. John had said, below around 30, definitely below is the recommendation. I've seen for myself that you get more points if you keep it between 1 to 6%. So they do want to see a balance on there and want to make sure that you're maintaining you're able to maintain some amount that you owe. So there's someone who's interested in attending the workshops on Saturdays. I did see it in the Cincinnati Herald. Are those still available? The Owning It?
And the next one isn't until June, but we'll make sure it's in June. And we'll make sure that we send you the notice so that you can get it on your website and send it to all of your networks, because it's a great workshop. And I think the information, we also have a deep dive the following Monday if you have more questions and you don't get all your questions answered. So there's a couple opportunities to get the information on how to buy a home. And we cover soup to nuts from the beginning to the end, the closing. It's a really, really great workshop.
Great question, Ms. Laverne. Will pulling one's credit reduce their credit score?
It's a great question. So if you are able to pull it yourself, so you go online and you pull it, however you do that, it will not hurt your score. The only thing that will lower your score is if a credit institution, so a car dealership, Home Depot, a bank, if they pull your score, it will temporarily lower your credit score. That's why we said, you know, if you're gonna rate shop, you know, you don't want to do a whole bunch at once, because that's a whole different place, you know, 4 or 5 different places that's lowering it all at once. You know, that can have a negative effect, but it's only going to lower it 5 to 10 points, and it's temporary. It'll only be for a week, maybe 2 weeks, maybe a month at most that it'll lower it. Then it'll go back up. So, you know, the cost of doing business in America and getting credit is, you know, people have to pull your credit score. So it's going to happen. You know, you can't avoid it, but just don't do it a whole bunch at once, and you should be fine.
Darn Bill Fair and Earl Isaac getting together like that. That was a great question, Miss Laverne. And then Miss Sherry, if your credit score is under 600, can you put down a larger down payment to get approved? John smiling.
That's an interesting question. And I'm not a mortgage person, but I'm thinking there's standards and we stick to the standards. Am I correct, John? If that's standard,
You're correct.
in that particular product.
Now, it might be, and I don't, it could be that if you put 10% down, you have to have a 650.
Mm-hmm.
And if you're willing to put 20% down, you can have, a 620. I will say you can get lower rates and you can get probably a little bit better terms if you are able to put more down at the beginning, because you have more skin in the game. There's less chance that someone's going to default on a loan if they have a lot of their own money into that loan. But 600, as far as I know, is a pretty hard cutoff. But if you're close, especially if you're in the 550 or above, you can get 50 points in a few months, in a year for sure. I've seen people make an improvement like that easily. So, if you are under 600 and you're out there, whoever you are, we can help you. There's a lot of people who are happy to help you.
Shameless plug for Fifth Third, because I bank there. So, but they have a great product that they offer, the identity alert, where I can get my Experian credit score, and then when I go into the actual app and I review everything, I can get my TransUnion and my Equifax credit score. So I can see all three of my credit scores within this app, and it's a soft pull, meaning that it's not impacting my credit score. So when I sat down with a personal banker one time, she was like, well, do you have the identity theft? Like, do you have the identity alerts so that we can look at your credit score and see where you are? I was like, yeah, I got that. And she looked at it and she said, yeah, you're on track. This is exactly where you need to be. Let's figure out if you can get this credit card. So it was really awesome that I didn't have to have a hard pull for her to evaluate whether or not I'd be approved. So it was a good thing. And that was a FICO score from the identity. I will say that Experian Boost is awesome. Experian you can download Experian on your phone and then link your bank account to the Experian and Experian Boost. And as you pay your utility bills and water bills, it'll boost your credit score because they're running off of a FICO Series 8 credit score. And even though our lender friends don't use it, it's nice to see that FICO is getting with the times of using those untraditional lines of credit that we sometimes need to use to secure a mortgage loan. So just a little tidbit. And then regarding pulling, so Miss Laverne had a question. She was asking about, is there a range of time that you can go and shop for a car loan or a home loan that won't really impact the credit really hard? So from the presentation that I was on from FICO, they had said that you have about traditionally a 30-day window. I recommend to everybody a 14-day window because I know when I've sat down with some of the mortgage officers, they have said that they like to see, your underwriters like to see that the person is being a informed consumer. So they're shopping around and they're doing it in a limited amount of time, but they also get the line of credit. And that's the other piece that they're looking for. Fact or fiction, John?
Fact.
Thank you. So my recommendation would definitely be that 14-day window, but FICO has said 30. And then does having a home equity loan affect the credit score?
I mean, yeah, it will. Now it doesn't. it also factors into that debit and available credit. I think they had a smaller numbers just to keep the math simple. But yeah, it does affect it. You want to keep that balance under 50% if you can at all. That's a great best practice. But they also will take that into consideration that those are larger numbers. And as long as you're paying it back, and making the payments, it's going to help your score. So any damage it might do as far as debt to available credit, it's probably more than helping as long as you're paying that back.
Okay. You guys have had some really, really awesome questions, and it is 7 o'clock, so we need to be quiet so that Miss Maria can do her drawing.
Drum roll, please. And the winner is Angel.
Angel,
yeah! I need Angel's last name, so Tiffany, email it to me.
Yes.
And I think Kayla will get in touch with you because we got to get both of the winners their cards. And so we'll work it out offline. But yay, $50 to Angel.
Miss Kayla, thank you so much for joining us tonight, even though you've been quiet, but I appreciate you being here.
I am the quiet person, but I was just going to say both Ms. Laverne and Ms. Angel, if you just want to email me your mailing address, I can send those directly to you via UPS. So Tiffany, if that's okay with you, yeah. Or would you rather have me send them to you?
I'm going to put them on an email together and send that to you right now, because Miss Laverne was wondering where her money was. I got you, Miss Laverne. It's coming.
I was on vacation last week. That's why you probably didn't hear anything about the cards, but I'm back and you'll be seeing them. So I put my contact information there as well in case you have additional questions. But Miss Tiffany, I will be looking forward to your email.
All righty. Thank you, ma'am.
Thank you, Tiffany.
Thank
you are
you.
So sweet, so kind, so wonderful.
Oh, thank you.
It's a pleasure to partner with you, John. As always, you are a superstar, and enjoy working with you all. Tiffany, you and I connect, and we'll get all of that owning it information, because I'd love for you to have everybody come back. Because at least learning the mechanics of buying a home is important. You never know. I've been on the e-bus, and a woman in her 50s came on the bus and she said, "Oh, I'm never going to be able to buy a home." My mortgage officer was right there. She began to engage in a conversation. Do you know that 60 days later, that woman closed on a $185,000 home that she had never believed she could ever do it? And she was able, it was her dream come true. So never, ever deny your dream. But you're going to have to do some work, which is what John is teaching you and what Tiffany is teaching you. Let's get started with the basics. Let's get your savings together. Let's get your credit together. And then go on and get your dream. It'll come.
Yes, ma'am. Thank you. Thank you. Thank you. Thank you, Miss Maria. Thank you, Mr. John. Thank you, Ms. Kayla, for attending. Thank you all for attending tonight. I appreciate your time and your attention. And the goal is to economic empowerment, to get you on those stair steps to owning your own home, starting your business, investing, looking to partner with Fifth Third and their investment presentation is awesome. So I'm really looking forward to that one, as well as the Owning It presentation. So if you're getting the Cincinnati Herald, I know I've seen the Owning It presentations in there too. But definitely I'll make sure that people get that information. Thank you so much for attending tonight. And I look forward to the next time we get to share more information.
Yay. Have a good night, everybody.
Bye-bye.
Thank you, Tiffany.
Bye.